Welcome back to Factful Finance, where we dive into all things personal finance with clarity and actionable advice. Today, we're tackling a topic that has been front and center for many homeowners over the last few years: mortgage forbearance. But what happens when things go wrong and you make mistakes during this process? Let's break it down and make sure you don't fall into these traps. Did you know that nearly 8 million homeowners in the U.S. entered mortgage forbearance programs during the height of the pandemic? That's a huge number, and while forbearance can provide short-term relief, if not handled correctly, it can lead to long-term financial complications. In this episode, we're going to focus on the common mistakes homeowners make with mortgage forbearance and how you can avoid them. But before we dive in, I want to remind you that this is educational content only. While we share insights and strategies, always consult with a professional for advice tailored to your situation. All right, let's get into it. Mistake number 1. Assuming forbearance means forgiveness. A lot of people hear forbearance and immediately think their mortgage balance is wiped out. Unfortunately, that's not the case. Forbearance only temporarily postpones payments, usually for 3 to 6 months, without penalizing your credit. However, those missed payments will eventually need to be repaid. They could either be tacked onto the back of the loan or repaid in a lump sum after the forbearance period ends. Not understanding this could leave you unprepared for a sudden spike in payments when the forbearance period concludes. Take Liam's story as an example. He thought he could skip payments for 6 months, only to discover that he owed $15,000 in a lump sum by the time the forbearance ended. This left him scrambling, with no strategy in place to manage the unexpected bill. Mistake number 2, not communicating with your lender. Communication is key. Many homeowners assume they can just apply for forbearance and it will all work out on its own. However, not keeping your lender informed of your situation or changes in your financial circumstances can lead to delays or complications in the process. If you're struggling to get back on track after the forbearance period ends, reach out to your lender to explore options for modifying your loan terms, such as extending the forbearance or exploring a repayment plan that fits your budget. Look at Emma, for instance. She entered forbearance when her business faced a downturn, but when the economy started to recover, she didn't inform her lender about her improved situation. By the time she reached out, the lender had already initiated foreclosure proceedings. A simple conversation earlier could have saved her from this costly outcome. Mistake number 3, ignoring the impact on your credit. Forbearance itself doesn't harm your credit, but if you stop communicating or miss additional payments during the process, it can. Even if you're in forbearance, your lender could report you as delinquent or in arrears if you miss payments. It's crucial to ensure you're making progress in the repayment plan or modifying the terms as necessary to prevent negative credit reporting. Benjamin found himself in a tight spot when he missed some follow-up payments during forbearance. Despite being in forbearance, the lender reported him as delinquent, and his credit score took a hit. To avoid this, always confirm with your lender that you're meeting their terms and don't assume everything will be fine without following up. Mistake number 4, delaying the decision to apply for forbearance. Timing is critical. Some homeowners wait too long to apply for forbearance, thinking their financial situation will improve on its own. Unfortunately, this only leads to mounting late fees, penalties, and the possibility of foreclosure. If you're struggling to make payments, the earlier you apply, the more options you'll have. Don't wait until you're in over your head. Proactively seek help and get in touch with your lender as soon as you feel a pinch. Take Harper's situation. She waited until she had missed 3 payments before reaching out for forbearance, which led to the lender refusing to offer assistance. By the time she applied, she had fallen so far behind that she could not catch up without facing a significant financial strain. Mistake number 5, not considering the long-term impact. Mortgage forbearance can help in the short term, but it's not a free pass. You need to have a strategy in place to handle the end of the forbearance period. If you're going to be hit with a lump sum repayment, how are you going to handle it? Do you have an emergency fund? Can you make a partial payment during forbearance to reduce the lump sum? Thinking about the long-term impact of forbearance is essential to avoid being blindsided when the forbearance period ends. Noah, for example, had to enter forbearance after a job loss, but when he returned to work, he didn't think about how to handle the repayment after 6 months. As a result, he found himself underwater, struggling to make a larger than expected payment. Mistake number 6. Relying on forbearance without exploring alternatives. Forbearance is not the only option available if you're facing financial hardship. Loan modification, refinancing, or a repayment plan could be viable alternatives. While forbearance temporarily suspends payments, a loan modification could adjust the terms of your mortgage, potentially reducing your monthly payment. Refinancing could lower your interest rate. These alternatives might help you avoid accumulating a huge lump sum at the end of the forbearance period. Sophia's case is an excellent example. She took forbearance, but she could have qualified for a loan modification to reduce her monthly payments permanently. Instead of relying on forbearance alone, it's wise to explore every option available to you. Wrapping it up. Mortgage forbearance can be a lifeline when you're struggling financially, but it's important to approach it with a clear plan. Be proactive, communicate with your lender, and understand the long-term impact on your finances. Avoid these common mistakes, and you'll be better prepared to navigate the challenges that come with forbearance. Before you go, remember, this content is for educational purposes only. Always consult a professional to guide you through your unique situation. Now, I want to hear from you. What's your biggest concern when it comes to mortgage forbearance? Let us know in the comments below. If you found this video helpful, don't forget to hit the like button, subscribe, and ring the bell so you never miss out on the latest financial insights. We think you'll enjoy the video coming up next, which may help you with even more financial strategies to improve your money management. Thank you for watching Factful Finance. Here's to making smarter financial decisions, one step at a time.